Welcome back. I'm Pratap here. In this video, let us do Bank Nifty analysis with the help of NeoStock software, supply demand zone chain. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel, click on this community tab, then you will get access to this post. This post is having an YouTube playlist link that will take you to the training videos. You just click on this link. I'm clicking on this link. Now we get into a playlist called the Supply Demand Zone Price Action course. In this playlist you have around 58 training videos are available. All these training lessons are available in an order. So what you need to do, just scroll down to the bottom of this page. Here starting from lesson 1.1. all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we'll provide in that channel. Now let's get into the analysis discussion. So this is the Bank Nifty monthly chart. Here you have a monthly zone, drop, 2 base candles and a rally. If you look into our supply demand zone chain from our NeoStock software, so here also you have the leg-in is on Jan 1st 2024. After that you have 2 base candles and then leg out. So this is the Jan 1st candle. So drop, base, rally. When you draw the zone, drop, base, rally, the lowest among the 3 types of the candles. This is the leg-in candle, base candles and leg-out candle. So here leg-in candle is having the lowest. So that's why you have to draw the zone like this. So this is a monthly zone. Let me change the color to monthly. Also let me add the label. So monthly demand zone. And EMA confluence, almost it is getting the EMA confluence, this zone. So this is one plus point. And there is no much to consider the overextension. There is a little overextension is there for the EMA point of view. So maybe by the time prices are going down and by the time prices enter into this monthly demand zone, the overextension will be completed. But it is a very small overextension. Now let's move on to the weekly time frame. So here we have a weekly zone, drop, base, rally. But let us check from our software. So changing the time frame to weekly, and let me generate this supply demand zone chain. Now the chain is ready. We have one pierced supply zone. Let us leave that. And we have a valid supply zone and demand zone. First let us draw the demand zone. We have 11/3/2024, 2 base candles. See, this is the 11/3/2024, 2 base candles. So let's draw the weekly zone. So this is a weekly demand zone. And observe, did you observe weekly demand zone is having confluence with monthly demand zone. See, recently once prices entered into the weekly demand zone, again prices moved, and now again recently again it entered into this zone, and from here started moving up. And this zone is also having weekly EMA confluence. Weekly demand zone is having weekly EMA confluence. And the price overextension is also completed. There was an overextension when prices are here. After that prices came down and overextension is completed. And now again prices are moving away from the weekly demand zone. Now weekly supply zone. We have a supply zone, weekly supply zone, on 22/4/2024, one base candle. Sorry, 22/4. So this is the 22/4. See here, there is a hidden body. Look from, see, many times it is difficult to identify such kind of zones. Carefully observe. Here you have the close of this candle. After that, from this close, you add the hidden body. If you add the hidden body, this is going to be a leg candle. So a rally candle. After that, you can add the hidden body, a small one, but you have a wick. This is qualified as a base candle and then a drop candle. So that way you can draw a zone like this. This is a weekly supply zone. So until this weekly supply zone is violated, prices will be moving here. Okay, now let's move on to the daily time frame. Let us also generate the chain for the daily time frame. We have three supply zones. In that, one is a high liquidity supply zone. The most recent supply zone is a high liquidity. And then we have demand zones. And the sixth one out of these three, the last one is the high liquidity demand zone. That is on 17 November. So anyway, the prices are far away at present at 43,000 level. And while closing price was 48,000. So nearly 5,000 points the Nifty should go down to get into this high liquidity zone. So it may not be possible immediately during this week. So let's focus on the most recent demand and supply zones. Most recent one is a supply zone, already tested 2 times. So when it was created on 7th May 2024. So this is the 7th May 2024. So at present prices are closed inside this. But this is not having confluence with the weekly demand zone. Maybe sometimes it will resist the prices. After that, this will be violated. And this is the daily time frame. So daily supply zone, daily high liquidity supply zone, this one. So this is the point we should remember. Let us draw one more inside because we are looking for zone confluence. So we have a supply zone 3/5/2024. This is the one 3/5/2024. This is having the confluence. This is a fine-tuned daily supply zone. And we have one more rally, 2 base candles and drop. But this is again LOTL zone. That means the same daily zone will be extended up to here. When you draw this, first let us limit ourselves to these 2 levels. So on last Saturday, the special trading session, prices came near to the digital line, not very near, but near to the digital line. Let us see what will happen in tomorrow's trading. And what about the demand zone? The immediately available demand zone is already tested 2 times. This was created on 26th March. After that, one base candle. March, this is a drop candle. Why? Because see here, generally you don't feel like there is a close, the close of this candle at the hidden body, then the whole body you will get up to here. That's why this is going to be a drop candle and then base candle. This is a rally candle. So it's a very tricky zone. That's why see such kind of zones institutions are creating and how these such kind of zones are holding the prices. This is the first test, this is the recent test. Already 2 times this zone is tested. Why we are saying recent test? They came very close to this zone. Our software recognizes when prices are coming. First let me change the color of this zone. This is a daily demand zone. See the zone confluence. So inside monthly we have weekly, inside weekly we have daily. Such kind of zones are powerful zones. And below you have one more daily demand zone. This is when it was created, 28/2/2024, 28 February. So this is the one. This is an important zone. Why it is an important zone? Because this daily zone is responsible for the creation of this entire weekly zone. Such kind of zones are powerful. Recently we've been discussing about this strategy. In our training lesson, the upcoming training lesson 22, we will discuss about this strategy. This daily zone is the origin behind the creation of this entire weekly demand zone. That means this daily zone will be having a very strong order flow. A lower time frame zone is creating higher time frame zone means the zone will be having a lot of order flow. Probably they are as strong as high liquidity zones, even though it is not high liquidity zone. As of now, it is not identified by the software. Maybe in future it may identify after several tests. Not only tests, there are other checks also software will be doing based on the volatility changes in the market. Okay. So let's limit to these 2 levels. And we have seen how well it worked last week. See, last time also I have drawn this demand zone. If anybody would have taken near this zone the trade, probably you would have got a very good profit during the last trading week. So this is about daily time frame. Now let's move on to the next time frame, 125 minutes. 125 minutes we will check only high liquidity zones are there. Otherwise we will move to 75 minutes. We have a high liquidity demand zone, but it is already pierced, so we don't bother. 6th one we have one more. This is on 25/1. 25/1 means here, probably here. We have a rally base with this hidden body, again rally candle. This is 24 January, but this is 25 January. 25 January, then how? I'm sorry, I didn't change the time frame. That's why I'm wondering. So somewhere here. 25 January 9:15. This is a drop base rally. This is 125 minutes high liquidity. Demand zone. If this 125 minutes high liquidity demand zone is violated, means this entire monthly zone will be violated. Okay, this is the only one. And what about the high liquidity supply zone? Here we have second one, 6th May at 11:20. May. This is the one. So here inside the daily we have this is 125 minutes. Sorry, let me change the color. This is the 125 minutes supply zone. High liquidity supply zone. This is 125 minutes high liquidity demand zone. Here I think I didn't change the color. This is 125 minutes demand zone. High liquidity. So only these two are we have drawn because the range is from here to here. But let us more rely on 75 minutes time frame. Only for high liquidity zones only I went to 125 minutes time frame, but otherwise our focus will be on 75 minutes because after daily we go to 75 minutes mostly. So let me generate the chain for 75 minutes. But remember, look into the trend. Trend also you should focus. 125 minutes trend is sideways. Daily trend is also sideways. Because the bank nifty is moving in a specific range for the last few weeks. This is the point you should observe. Okay, I am changing the time frame to 75 minutes and let me generate the chain. Now 75 minutes trend is changed to uptrend. We have an immediate high liquidity demand zone available in 75 minutes time frame. That is on 26th March, 9:15. After that, 4 base candles. March 9:15. This is the one. See, these candles are looking like base candles. Such kind of candles are real challenging. See here, you have a candle, you have a, looks like a base candle, but you add the hidden body, this is going to be a drop candle. After that, 1, 2, 3, 4 base candles, and again with a gap up, there is a rally candle. Such kind of zones are very powerful zones. This is a 75 minutes high liquidity demand zone. Because such kind of zones are not easily visible to the human eyes. Lot of practice you have to do. Because sometimes ignorance, okay, all these base candles ignore. There is no leg candle. This is the leg candle, all these base candles, so many candles, let us ignore. That way we think. But actually institution, they tricked us here. So we have a drop candle, 3 base candles and a rally with a gap up. See how nicely they created. It took a trade from the zone, see the move, the huge move it has given. How much profit you would have got if you would have taken a WIT trade, weekly income trade. You have a weekly demand zone, inside you have a daily demand zone, inside you have a 75 minutes high liquidity demand zone, and institutions created this zone with a trick. Actually by first what to say, in your first impression, this is not look like a valid zone, but it is a zone because of this hidden candle. After that, see how much move this zone has given. It took you to the all-time high. That's why they are powerful zones. And what about the supply zone? We have an immediately demand zone is available, that is 16.5. Let us draw this, even though this is a normal zone. 16.5, 2024, 11.45. $16.5. Oh, I'm sorry, this is the demand zone. Immediately available, recently created. 16.5, 11.45. This is the leg-in base. When this is created on Thursday. This is the leg-in candle, base candle rally. This is the newly created 75 minutes demand zone, but it is a normal demand zone. Because the trend is, at present the trend is uptrend. If the same uptrend continues, then probably it will give you a trade. Bullish trade setup it will give you. That way it will be helpful. And we have only one supply zone, that is a high liquidity supply zone, already tested 4 times, 3 rejections from the zone, and also there is a gap up with a leg out. So when it was, this is on 7th May, 10:30, after the 3 base candles. This is the one, 7th May, 10:30, 3 base candles. So this is a daily high liquidity supply zone. Probably this is the one responsible for the creation of this daily high liquidity supply zone. So it's a very important zone, this 75 minute zone. See, this 75 minute supply zone is responsible for the creation of daily high liquidity supply zone. You should not forget. And this 75 minute zone is also a high liquidity supply zone. Moreover, so this zone is having 2 advantages. The first advantage, it is a high liquidity zone. The second advantage, it is responsible for the creation of high liquidity supply zone. And third advantage is also there. This 75 minutes high liquidity supply zone is having confluence with weekly supply zone. You may say this is not part of daily zone. Yes, this is part of this daily zone. The one below, but not inside the weekly zone. But anyway, it is having some strength. If you have a good fine-tuned 5-minute zone inside this 75 minutes high liquidity supply zone, at least it will help you for one very good intraday trading. If tomorrow institutions opened with a huge gap up and above this 75 minute zone, that is a different story. This zone will be violated. Otherwise, this will be having strength. Let us check on tomorrow's trading session, how powerful it is. Already it is tested on last Saturday's special trading session. Okay, these are the 75 minutes high liquidity zones. So we have a 75 minutes demand zone here. Here we have a 75 minutes high liquidity supply zone. Next we will move on to 25 minutes. So 25 minutes we will check only high liquidity zones, because our more interest is on 15 minute zones. At present 25 minutes trend is sideways. Here we have a resistance supply zone R underscore SZ 3 times it is tested. This is the most immediately available. Let us draw this. This is 7, 5, 11, 1440. After that one base candle. The same thing. Drop base, drop with the hidden body. Inside the 75 minute zone. This is the 25 min high liquidity supply zone. Then any demand zones? We have low priority demand zones are there. You please draw them on your charts. You take 6th one and 7th one. Low priority zones I am not drawing. Next 9th one is there. 27.3, 2 base candles. 27 March 1350. Maybe somewhere here. $13.50. So here we have $25 minutes HLQ demand zone. The low priority demand zones you please draw on the charts in your charts. So I am not going much deep into 25 minutes time frame. Our focus is on 15 minutes. So I'm changing to the 15 minutes time frame and generating the chain. Here also let me change the time frame in the chart. Now we are in the 15 minutes chart. Okay, in 15 minutes we have to carefully observe the high liquidity zones. The immediately available high liquidity 15 minute zone is 4th one, already tested once, leg out with gap. And one more point, 15 minutes trend is sideways. On 7/5/15, sideways means 15 minutes trend is sideways means if you are taking a trade in the 5 minute zone, in sideways you can plan your trades in both long trades as well as short trades in high liquidity zones. In high liquidity 5 minute zones, you can plan even 15 minutes zones also, fine-tuned 5 minutes zones are there, you can plan the trades. So what is the immediately available high liquidity supply zone? $7/5/15, one base candle. Maybe the same one. No, a little above. 7/5/15, sorry. 7/5/15 hours. Okay, here you have a leg in. This is the base and drop. The same 25 minutes, but this is more fine-tuned way. So what I do is, I will give preference to the 15 minutes. Like this. This is a ERC candle. This is the ERC candle as a leg in, base and a drop with the hidden body. This is a drop candle. So this is the 15 minutes. So let me consider this. The same is the 25 minutes also. Both are same. Anyway, we are giving top priority to inside 75 15 minute zone. If there is a fine-tuned 5 minute zone, definitely it is a good area. Apart from that, you have one more fine-tuned zone is available. You have a rally, 2 base candles and a drop. This is a fine-tuned zone. This also you can draw. Here also a fine-tuned 5 minute zone is there. You can plan a trade. It is a HLQ trade. You can draw a 15-minute zone like this, a fine-tuned 15-minute zone. Let me change the color. This is a fine-tuned 15-minute supply zone. Instead, if you have a fine-tuned 5-minute zone, you can plan a HLQ trade. Okay, this is the immediately available, and there is a little above one more is there, 15-minute zone. That is on 3rd 5 9:30, 3/5 9:30. This is the one. So this is also a 15 minutes HLQ supply zone. Okay. So let's limit ourselves to this level. There is one more is also there above 34 2 base candles. Is this the one? 34 14 hours. Yes. Here you have another 15 minutes high liquidity supply zone. But remember, market is bullish, all these zones will be violated. That is the point you have to remember. Market is super bullish. Rarely happens such kind of days. I remember some around 3 weeks back, such kind of, we have seen such kind of market. There was a super bullish on a day, all the supply zones are gone and finally market reached all-time high. They will happen once in a while. Just because of that one rare day, you cannot disturb your trades in the remaining days by thinking about that. After that, we got plenty of opportunities, trade opportunities. Okay, these are the high liquidity supply zones. What about high liquidity demand zones? They are very far away. 10th one is a high liquidity demand zone. We have a high liquidity, low priority demand zones are there. You please draw them on your charts. These zones. I am mainly focusing on high liquidity zones. When this is on 26th March 15 hours. Maybe somewhere in this zone. March. This is the one. This is a legging ERC candle, and then we have a base candle. So this is a 15 minutes high liquidity demand zone. So let us limit ourselves to this level only. If this is violated, then we will again generate another report. See, I already picked up the orders in this candle. This 25 minutes high liquidity zone is pierced, right? Let me delete this. Maybe I didn't notice while drawing. See, this is the zone. From this zone, it picked up the orders. And then see the rejection and how prices moved. So this is a 75 minutes immediately available demand zone, and then we don't have any near. This is the only one nearest to high liquidity 15 minute zone. You need to fine tune this 75-minute zone, otherwise this zone will be violated. See here you have a drop, base, rally candle is there. Inside you should find a 5-minute zone, but that should be a fresh zone, the 5-minute zone. This is the fine-tuned 15-minute zone. In case if this fine-tuned 15 minutes demand zone is not having a fresh zone, this zone will be violated easily. Now let's move on to the 5 minutes time frame. Let us check, is there any fresh zone available? See, you have a drop, base, rally, the fine-tuned 5-minute zone. This is the demand zone. This is the fine-tuned. If this is a high liquidity demand zone, that is excellent. But that our software will tell that. But at this point of time, this is a fine-tuned 5 minutes demand zone. This is good enough for us to plan at least one trade. Provide trend is supported because the 75 minutes demand zone is not a high liquidity demand zone. It is a normal demand zone. If trend is uptrend, we can plan a trade. If you want to go for a swing or positional trade, by the time prices enter into the 75 minutes demand zone, if 75 minutes trend is uptrend, definitely you can plan a trade in the 75 minutes zone. Prices need not reach up to here. You can plan a WIT trade. But if you want to plan an intraday trade, prices should come up to here. By the time at least 15 minutes trend should be uptrend. If it is a 75 minutes zone is a high liquidity zone, you don't bother about the trend. Anyway, this is a normal zone. So let's move on to the 5 minute zones, the last time frame in our analysis. Any Saturday zones are there, just ignore them. Fourth one is a high liquidity supply zone, already tested 3 times, 4 rejections. When it was created on 3rd May, 10 o'clock 10 minutes, 1 base candle. 3rd May, 10 o'clock 10. Where is 3rd May? Here. So this is the one. 3rd May, 10 o'clock 10. We have a drop, base, drop. Here we have, oh, very good. Why I am saying very good? See here there is a zone. This entire zone is created by this 5 minutes zone. Supply zone. This is a 5 minutes HLQ supply zone, and which is responsible for the creation of this entire daily supply zone. This 5 minutes high liquidity supply zone is the origin behind the creation of this daily zone. And because this is a high liquidity zone, see from here again a rally base drop, one more zone is created. Again from the same 5 minutes high liquidity supply zone, see here we have a rally, 2 base candles drop, one more zone is created. Already tested 2 times here. This is the first test and this is the first test actually. This is the first test, this is the second test, this is the third test. So excellent zone. Because it is such a powerful zone, so it was able to create this daily zone. And what is the next high liquidity? See, all these normal zones, supply zones, I am not drawing on the charts, but you people can draw the zones. You have to do this. My concentration is only on the high liquidity zones to see the real order flows. But when you are following trending or trending based trading, some of these zones definitely give you good trades. If they are supporting the trend, uptrend, demand zones, downtrend, supply zones will give you the trades. Even the normal zones will give you good trades. Okay, here 15th one, we have a high liquidity demand zone. This is having leg out with follow through candles. Already tested once and is rejection. And when it was created on 17th May at 10 o'clock 10 minutes. 17th May, 10 o'clock 10 minutes. We have already drawn. No. 17th May is 17th May, that is Friday. Okay, fine. 18th is Saturday. Okay. I'm just worrying whether 17th May is Saturday. Okay, fine. 17th May, 10 o'clock, 10 minutes. Okay, here we have, how many two base candles are here? Yeah, two base candles. At 10:25, we have a leg out candle. This is the one. So this is the high liquidity demand zone. This is 5 minutes HLQ demand zone. And this zone is currently holding the prices. And above we have this 15 minutes high liquidity demand zone. Currently that is holding the prices. This 15 minutes high liquidity demand zone. This is also having a fine-tuned zone. We have a rally, 3 base candles and a drop candle with hidden body. You can draw this fine-tuned zone, rally, base, 3 base candles and a drop. Inside the 15 minutes high liquidity demand zone. And remember, this 5 minutes high liquidity demand zone is created inside daily high liquidity supply zone. If this is so powerful, suppose if this 5 minutes high liquidity demand zone is so powerful, if institutions again adds a new order flow on tomorrow, probably the daily zone may be violated. But just above daily there is a 75-minute zone responsible for creation of daily zone. That 75-minute zone is again high liquidity zone. There might be some strong order flow will be there. Let us see whether the market is going to be a narrow market on Monday, a fight between these two zones and moving here, or one of these zones will be violated. We have to see. Then what could be the current range? So let's go to the daily. Trading view become very slow all of a sudden. Okay. So where is the daily zone here? Here we have a daily zone. Where is the daily supply zone? This is the daily supply zone. Now prices are closed inside the daily supply zone. Let us assume tomorrow supply is very strong, then prices will be moving up to here. Not tomorrow, next week. What I mean to say, next week, if the supply is very strong, prices will be again coming to this. Suppose demand is very strong because they created new zones, institutions further push, this daily supply zone will be violated. Probably some fight will be there at this 75-minute supply zone responsible for the creation of this daily. Even after that will be violated, and then prices will be entering into the next daily supply zone. That means we have two trading ranges. The first range will be, where is info line? Yeah. The first range will be from here to here. How many points? Nearly 1929 points range will be there. When this range is valid, if supply is strong, this range will be valid. Suppose demand is strong, then the range will be from here to here. We have 2800 points range. May not be. At the time prices won't come here. Probably support will be coming either from this 75 minutes demand zone, newly created normal demand zone, or this 5 minutes high liquidity demand zone that will make the magic. At the time the price movement will be like this, either from here or from here. But because we are measuring from the daily zones, I am just showing you from here. This will be the maximum range. Mostly price movement will be from here to here. So one of this will definitely holds. If supply is strong, this will be the range. First one is the range. If demand is the strong, this will be the second one. At the time prices won't come up to this level. If supply is strong, prices will be coming here, and after that again prices will be moving up. It takes maybe a next 1 or 2 weeks time. I mean next 2 or 3 weeks time to complete this price action. If tomorrow the demand, tomorrow means this coming week demand is strong, this will be the range. And third possibility is also there. If market is very narrow, because this is the election season and results will be coming after only 2 or 3 weeks. So probably prices will be narrowly moving somewhere here. Coming here, again coming, moving like this. Such kind of small narrow range will be there. That is also possible. We cannot rule out that possibility. And please draw the other zones. All these are all normal zones at this point of time. Who knows, some of these zones will turn into high liquidity zones in the coming days. So this is the update. Hope this information will be useful to you for our further trade planning. Let's all meet again in our next video. Thank you.